This episode is sponsored by Lupton Capital, which provides a variety of investment services to both retail and institutional investors on platforms such as Seeking Alpha, Substack, and StockTwits. For more information on these services or for links to those services, please visit luptoncapital.com. Hey everybody, welcome back to the Investing with the Whales podcast. I am Jonah Lupton, your host, and today I have Ben Rabizadeh, founder of StoryTrading, and he actually just launched a hedge fund called Ascending Capital. It's ascendingcapital.com, and his investor community is StoryTrading.com. Ben, how are you?
Doing great. How are you doing today, Jonah?
I'm good. So we got a few things to talk about. Last time, well, I reached out to you, a couple weeks ago, because I did see that you launched a hedge fund. So let's start there. Did you start the hedge fund because you've had so much success building your investor community, and it was just kind of the next natural step after that?
Sure. Well, actually, interesting thing is I've had people over the years ask me, do you invest money? Do you invest other people's money? I'm like, no, I don't. Just come into the community and we'll talk about stocks and collaborate. So there's always been a demand for that. But what happened is there was one particular person in our community who was listening to our morning show. Every morning at 9 a.m., we do a show for our subscribers. And he was listening to the morning show and executing the ideas that I talked about in the morning. And he was doing really well. And actually, I've noticed that he was executing really well. And the interesting thing is, like, I'm really great at analysis, but not great at execution. And I jokingly kind of messaged him a couple of times. It's like, hey, we should start a hedge fund one day. And it was just like something in passing. And then like 6 months after I made that comment, he actually reached out to me. He said, remember like 6 months ago, you said like we should start a hedge fund one day? It's like, well, I actually have been thinking about that. And I want to, maybe we can work together and start up a hedge fund together. So I met up with him and we did it. We launched the hedge fund May 1st. We're in our second month right now.
So you said it takes about 6 months when you first started working on the paperwork with a lawyer?
Probably all in, it did take 5 to 6 months to get the hedge fund set up. Yeah. What
was the trickiest part?
Something we didn't expect, bank approval. Getting approval by a bank. It was a very long, onerous process. And what's interesting is the bank that we chose and we finally got approval from was First Republic. And it was actually, I think it was like Friday morning. I think it was like a Friday morning when they were being taken over by the feds. And it was that night before, Thursday night, like they had emailed us. They're like, oh, your thing is like pending. It's like the very last stage of approval and whatever. It's like, we're just waiting for this final email that you're approved. And then like Friday morning, they're like, the feds took over First Republic. And they're like, did we get in? Did we get approved? So that was crazy.
Does that mean that you're now working with JP Morgan since they took over?
Yes, exactly. And it's interesting because JP Morgan, they don't support hedge funds at all. None of the big banks do. Only smaller ones do.
Why don't they? They just look at it as unnecessary risk?
I think it's because it doesn't make a lot of money for them, because most hedge funds, the bank accounts don't hold a lot of cash. All the cash is in the broker where you're trading. So the money's just in there as it's being wired, in between investors and back to the brokerage account. So it's not profitable for them. I think that's why they don't do it.
Gotcha. Okay.
Yeah. But now they do. Now, I don't know if they're taking new clients, but now that we're in. And
I wonder if they'll keep the business or sell it off to someone else. But interesting how that played out. And then you also, I assume you need a lot of other vendors, right? Compliance, fund administrators. All that.
Yeah, it's very highly regulated industry. There's like mandatory audits you have to do with outside, vendors, and you need fund administrator you talked about, which you need outside fund administrator. They actually control everything. They control the money flow in the bank accounts. We can't even move the money around. So, it's definitely very highly regulated. There's some costs involved, not only the startup costs, but the ongoing every year as well.
I mean, what's ongoing cost for a small fund? 50 to 100,000 a year when you add up legal.
It's really directly related to the AUM.
Okay.
So like all of these services, they actually look into what's your AUM, how much trading you're doing, how many investors do you have, because that's what directly causes more time for them when they're doing the auditing. Yeah.
Okay. And what's the goal? I mean, right now I know it's mostly friends and family. Is it to keep it friends and family early on until you develop a track record?
Our goal is to get to about minimum $30 to $50 million under management. I think that's based on our fee structure, that's kind of what we need to stay in business, a viable business for the long term. So right now it is mostly friends and family and some people from our story trading community. We're building a track record now. We have our first month report out. I think we did about 5% in May versus S&P. It was up 0.5%. So our goal is to build that track record, have a few months of performance. I'd like to get to 5 to 10 million under management by the end of this year, and then that $30 to $50 million mark within 2 or 3 years.
So talk about what's the strategy of the fund? Because I think of you mostly as a small cap, mid cap guy. Kind of special situation. Is that
not necessarily? It's I don't discriminate in terms of size of the company. It just so happens I have a little bit more focus in smaller cap because I research the companies I get involved in. So I'll do a fundamental research. I'll talk to the CEOs, and because I can't really talk to the CEO of Palantir, for example, right? So I don't have as much of a conviction level in a larger company. But it doesn't actually. Palantir is one of the stocks we do have a position in the hedge fund, but that's why I tend to be attracted towards the smaller caps, just because I have access to management, so I can get that insight and that conviction level by talking to management. But there's no actual limit. Actually, I think we have a position in Tesla right now too. So we don't technically have a limit. We're open to everything. If I can get a comfort level about a larger cap without talking to management, that's fine with us too. But really the strategy comes from the strategy I built with story trading over the last many years. So the whole idea behind story trading is that it's a multidisciplinary approach. So when we look at a stock, we come from a perspective of, a lot of fund managers or fundamental investors will come from a perspective of markets are inefficient. There's a particular price that a stock should be trading at. And the difference between where the stock should be trading at and where it's trading at is the opportunity. That's what a lot of investors do. We look at it completely differently. We say that the market price is the correct price at all times. Whatever the stock is trading at today is correct, right? So we're not only looking, how do we make sense of that? Because we're not only looking at fundamentals, but we also look at technicals, catalysts, and sentiment. Basically, we're respecting all market participants. Right. So if there's a bear out there or whatever, we're not saying they're wrong. We're saying, okay, they have a point, and the net aggregate opinion of all the, opinions of the market participants is how you arrive at today's market price. So when we analyze a stock, we basically ask, why is the stock price where it is today? So we seek to understand, why is the stock price where it's at today? And if there's a disconnect, let's say with fundamentals, well, then that can be attributed perhaps to sentiment. I say, okay, well, the sentiment's really poor in this stock because you see how it's trading versus fundamentals, or the sentiment's really good with this stock. And if we seek to understand, well, why is the sentiment good? Why is the sentiment bad? What are the qualitative factors impacting, this opinion from others on the street? So we seek to understand why today's price is the correct price. But then people ask, well, where's the opportunity? If today's price is the correct price, how are you going to make money? And the answer to that is you're going to make money on rapid re-ratings. Right? If today's price, let's say if yesterday's close was the correct price, then if some new event happens today, right, there's a delta in information, well, then you're going to have an immediate impact in terms of a delta in price. So if I have an understanding that, let's say, here's an example. It's today.
Well, even Palantir. I mean, sentiment around Palantir was pretty horrible going into Q1 earnings, and now all of a sudden everyone's looking at them as an AI stock.
Yeah, and that's obviously the sentiment premium they get because of AI. But here's an example, Cano, which Cano Health, CANO.
Oh, yeah.
Right. So Cano has been decimated. And part of the reason it's been decimated is because people have a real problem with the CEO and management. They think that the CEO's, he mismanaged acquisitions and all kinds of stuff.
There was a rumor that they were going to get acquired last year, right?
Yes, from CVS, I think it was much higher than here. And it fell through. So, if you have an understanding that says, hey, this stock is underpriced because people have a bad perception of the CEO, well, then if you know that, and if you have that stock on your watch list, and then you get a news item, saw this Friday afternoon that says, hey, the CEO's been ousted, right? Well, that's a positive event. And because you understand that market value is where it's at, you say, okay, now I can make a prediction that the stock's going to rapidly re-rate because the CEO's been ousted. So, I mean, it kind of happened for a bit. It went from after hours, at least 140 to 160. Now it's at 138, still up 10% for the day. So that's the kind of thing we're doing. So we're respecting, then we'll triangulate all those factors with technicals, right? So we'll take a look at the chart, look at the key resistance areas, key supports, and we'll kind of triangulate that with that. One of the things that works really well for us is when a company comes out and they increase or decrease their guidance. And let's say they increase their earnings guidance by 20%. So roughly, you say, hey, the stock should go up. And it's uncanny how often this works, by the way, Jonah. Okay, their earnings guidance is up 20%. And then you say, okay, it should roughly have a 20% move. But then you kind of cross-reference that with the technicals and say, okay, well, there's a maybe it's only going to go 15% because there's a resistance level near there. Or maybe up 20%, we'll put it right firmly in a gap and it can move another 4% before resistance. So we'll move up 24%. So that's the way we use like a multidisciplinary approach, catalyst, sentiment, technicals, and fundamentals to identify opportunities where a stock can re-rate in a short time frame.
And a lot of times if they, let's say they raise their full year guidance, revenue or earnings after Q1, raise it by 15%, the stock might move more than that because investors are sort of assuming, oh, this is just the first beat and raise. They're going to beat and raise it next quarter, beat and raise the quarter after. So you get to the end of the year and they're, that Q1 guidance was obviously conservative. So how many are you guys going to be pretty concentrated in number of positions? I mean,
well, that's the $1 million question, right? And, to be honest, that's what we're trying to fine tune every day. We spent a lot of time coming up with our risk management rules before our day one launch on May 1st. And we've been iterating on that. It's been basically a weekly review process. We review our performance and also monthly at the end of May, and we make changes in terms of our allocation strategy. So that's something we're still trying to figure out, whether we're going to be highly concentrated in a few names or we're going to be kind of more diversified. And that's really the secret sauce, honestly. I've been talking to a lot of other hedge fund managers, and it's all about risk management. And risk management is almost all about allocation size.
I mean, it sort of depends on it depends on the market too, like what the market's giving you.
Yeah.
When you find opportunities, how much you like the opportunity. The markets have had a big run this year, especially in technology. It's hard to get super excited about certain tech stocks at these prices when where they were trading just 6 months ago. I can't get excited about Nvidia at $400. Knowing it was at $150 back in November or, somewhere around there.
I hear you. Although we do own a little bit of Nvidia for the fund here, 435. But yes, it's kind of crazy. But you're right. It's there's no one system that's good for every market condition. Every time the market changes from a choppy market to a bull market or a choppy market to a bear market, you're probably going to find different funds outperforming. Because every fund's niche or risk management strategy is probably ideal for a certain fund environment. And I guess the goal is to change your risk allocation strategies when you can identify what kind of market we're in and kind of change that up. So we're trying that, but it's definitely very challenging to do that.
Will you buy a stock if the technicals are bad? Or will you just start with a smaller position and then add to it as the technicals improve? Yeah,
we will. Absolutely. In fact, one of the concepts at StoryTrading is the whole reason I started the StoryTrading brand is I did when I was back, as a retail trader. I've been trading for like 25 years. I tried pure fundamental investing, which really frustrated me. I tried pure technical trading, which really frustrated me. I tried pure, headline trading, follow the headlines, which really frustrated me. And it didn't work. And like a technical trader, to me, in a way, it's just gambling. It's like, yeah, here's your support, here's the resistance, but there's like a 50-50 chance it'll hold support, and what do you do if it drops like 3 cents below support? You sell it, or do you hold it? And then, and then a lot of times you'll get shaken out at the low because you had a stop loss. So like pure technical trading drives me nuts. So like one of the things that I try to do is predict technical breakouts and technical breakdowns based on these other factors, whether it's catalyst, sentiment, and fundamentals. So I try to get ahead of the technical move. Usually that's what I try to do. Let me see if there's an example of that today. So I think, go ahead.
Last year, I know you did very well with AEHR.
Yes.
You guys still own that one?
We own some for the fund. Yeah.
Okay.
We own some for the fund, and that was great. That was probably it was my number one best investment.
You still
ever.
As bullish. I think last time I checked, the stock's in the 30s, right? High 30s.
It's it hit like 45. I think it's pulled back now the last couple of days. So right now it's at 39.
But I mean,
Yeah.
this stock was in low single digits like a year and a half ago, right?
Yeah. I had owned this at $2.50, and then I doubled down at $5 when actually no, I doubled down at $2.50. That's when I had it at $2.50. The news came out about the EV stuff, and I was able to double down at $2.50 before anyone really caught wind. And then the thing did a 10 bagger before I sold any shares. I took it from $2.50 all the way to 25 in a 4-month period, which is crazy. Wow. And then at the time, I'd gone on Benzinga when it was $5, and I made a prediction that it would be $50 to $100 in 2 to 3 years. So we're coming up on 2 years now in 2 months. Nice. And pretty close to the 50. So that ended up being a really accurate call. But I did sell pretty much everything I had at 25. It went all the way down to 7 after that. I picked up a small position, and I basically, at least in my personal account, has only had a small position since 7. Now it's 39. But we did, since we immediately, one of the stocks, for our hedge fund, we do also have an allocation for long-term picks. So we're not looking, what I described earlier, I was talking about timing the markets based on catalysts. So that's a portion of our fund that we're actively trading. But then we have a nice allocation for long-term picks that we're not trading. So AEHR is one of our picks that we're just holding.
What's an example of some other long-term picks?
All right, let me tell you. Hold on. Let's see what we got in here. In our long-term accounts, let's see.
And when you say long-term is what, 12 months, 24 months?
The long-term is hold it until the story changes.
Okay.
Yeah. So in there, we got NVIDIA. We have, let me see the names that you might be, a lot of smaller companies you may not be familiar with. So yeah, we have Dario Health. Yep. We have REL, which is, what's the company name for REL? Let's see here. REL is Richardson Electronics. We got MP. That's a rare earth materials company, yep. MP. I think you might be familiar with that.
Yep. That was
then we have an AI healthcare company, which is AUGX, which is a nice little company I was familiar with before with good fundamentals, and they got the sentiment upside from AI. And it's AUGX. VTSI, another microcap for Aehr Test Systems. Celsius. Oh, we have Celsius in here. That's yours, right? We got that in our long term. That is mine. Yeah. We got Tesla, Celsius, Palantir. Those are a few names. Okay. Uranium. Cool. We got a few uranium picks. URNM, CCJ, and small SMR.
So AEHR was your 10 bagger. Celsius was my 10 bagger.
Yeah, that's awesome. Yeah. That was a great pick.
I got in, I think $12 was my first purchase of Celsius back in 2020. And it's at like 140, 145 today. So
nice.
That's been a good one. I mean, I'd love to find the next one, but finding stocks to go up 10x in 2 years is not easy, or 3 years.
It's not easy, but I do try to do that. And I have a few in there that we'll see. I mean, one of them has been a big loss for us. It's XXII, which I'm losing big on right now because they just didn't inflect.
Not the fake cigarette company.
Yes, the very low nicotine cigarettes, the VLN cigarettes. So if this works, it'll be a 10 bagger. But it's just been difficult because they've had to raise money. But things are really inflecting for them, both in terms of store availability and the distribution, but also in terms of regulatory action. Things are really getting really favorable for them. And there's a possibility in August, in 2 months from now, we'll see the FDA issue some sort of ban for menthol cigarettes, but with an exception for only this product. VLN cigarette from XXII might be the only menthol cigarette you can sell, possibly.
So how do you guys, you talked earlier about benchmarking. What indexes do you guys benchmark yourself against?
Well, most hedge funds are judged versus SPY, and there's some automatic reports that are created for us, and they all benchmark versus SPY. But internally, I'm really looking at. There's obviously QQQ, but I'm really interested in ARK and IWM. ARK is kind of views it as an indice for growth stocks and risk assets.
Yeah, I mean, I send out a newsletter every morning, and I cover 7 of the indexes plus ARK.
Absolutely.
It's like a growth index. Yeah.
It is. I do consider a growth index because I've seen the relationship with growth stocks. It doesn't need to be in the ARK fund, but there's absolutely a gigantic ecosystem of money that is following and algos that are following ARK, and they'll automatically buy or sell riskier assets based on what ARK is doing. That's pretty obvious. So yeah, I mean, I would like to beat ARK and IWM, But honestly, I'd like to beat all of them. So like our reports compare versus SPY, but internally I'm looking at SPY, QQQ, RK, and IWM, which is the Russell 2000.
Do you guys do any hedging right now, or do you have plans to do hedging if the indexes start to break down, or will you just raise cash?
That's a great question. We do have some hedge on. We have a small kind of allocation for, I think of it as kind of like insurance. Like, so we have some puts on the QQQ. Figuring out that exact allocation, like how much we're willing to lose, monthly or quarterly in that to protect our portfolio. Right. Figuring that exact number out is something we're still work in progress for us. But we are doing that. And we're also shorting here and there when we find opportunities to short. Something I've never done in my personal account ever is shorting stocks. But since we opened up the hedge fund, we are actively shorting opportunistically.
I'm not a very good shorter.
Yeah.
Partly because the markets go up more often than they go down.
Mm-hmm.
And, even if stocks look overvalued, they can stay overvalued for a very long time.
Yeah.
So it is hard to short. What types of stocks are you looking to short?
Yeah. Well, part of the reason that we are doing that short is because logistically, it's very easy to do, on our platform. So hedge funds use different software and they have different access than retail. So shorting is extremely easy. There's always, shares available, and you can do it like in a split second. So that's part of the reason why we're doing it. But what are we shorting? It's kind of like the same thing. If I see news out that's negative for a company, we'll jump on it right away. If they let's say guidance is down by 20%. Which one was it? It was Foot Locker, I believe.
They had a disastrous quarter.
Right. As soon as we saw that news out, I did the math. I think it was 40%. I think they guided earnings down 40%. So we jumped on that and we're short for a few days. And we just look at the chart. It's crazy because we did a calculation. If the price reflects that 40% guidance drop, it should go to 25 is what I had calculated. And that's exactly where it bottomed out at, which is really uncanny. That's exactly what it was. So that became the target just based on the 40% decrease in EPS guidance.
It is funny, like with NVIDIA, when they were, reported Q1 earnings and raised their guidance, that stock was ripping right away.
Yeah.
But some of the small caps, mid caps, they report and they have a big beat or a big miss. And I look at the stock after hours and I'm like, it's only moving like 3 or 4%. And then it takes half an hour for the rest of the market for the algos to figure it out. And then it's up or down 15%. So there is a window right there where if you see some of the news come through and you can analyze it quickly, you can scalp a quick 5 or 10% either direction.
That's right. Yep. And that is a playground I really like to play in.
Even Celsius, when Celsius reported their blowout Q1 number and the stock was up 4 or 5% after hours, I'm like, what the hell's going on? Like they crushed it. Did I miss something? And the next thing you know, it's up 20% the next day.
Yep. I think we bought it that after hours as well.
Yep. I think I bought a little bit, but I was just scared. I'm like, did I miss something in the report? Yeah. Like, is there something I didn't read correctly? So you just,
And it's definitely possible to miss something too. Sometimes the headlines look great, which is obviously why you have to diversify.
Some of these earnings reports are 6, 7, 8 pages of financials and all sorts of metrics and whatnot. And story trading, you want to give a quick little introduction to what that is? I know it's your investor community. You bring on a lot of people to pitch their ideas, right?
Yeah, well, I do a show at least twice a day, myself, just going over the catalyst and everything. And then we do different shows now and then. I've probably interviewed about 3 dozen CEOs. So they don't happen like on a scheduled basis, but whenever I make contact with someone, I think it's an interesting story, I'll have the CEOs pitch. And we also have members of our community pitch stocks. In fact, last week we had someone pitch DocGo, DCGO.
The technicals look good on that too.
Yeah, and DocGo today actually, and he gave us a heads up that they were going to be at an investor day today, which I think just ended 4 minutes ago. And during that investor day, they released a new presentation and they guided. This is crazy. I think they guided for 250 million revenue in Q4. And I see the analyst at 600 million for full year 2024. So it looks like a massive beat in guidance, and the stock's been spiked straight up since that was released a couple hours ago. But that's part of what we do. We bring in different people interview and they give us their ideas. So DocGo was on my radar because of this guy I interviewed. It was Chris Tuttle. I interviewed him last Wednesday I actually interview him every Wednesday. I have a show with him every Wednesday at 12 p.m. So I'll be back tomorrow at 12 p.m. So we got .go was on our watch list because of him. So that's part of our process, not only for story trading, but also for the hedge fund, right? I'll basically, through crowdsourced collaboration, get a watch list of a bunch of stocks, and we'll roughly know like what the catalysts are coming or what might impact the stock, and then we'll watch the news feed, and we'll be ready to pounce.
Do you like companies that don't have a lot of analyst coverage? Does that give you a better chance of finding these opportunities?
That's actually never been something I've cared about or looked at. Yeah. How do you look at that?
Well, I'm not sure. I mean, like there's a small cap company I just started buying shares in called EOLS.
Okay.
It's similar to Botox. So it's like a smaller competitor to Botox. They'll do, I'm trying to think, I can't remember the numbers off the top of my head. I want to say they're at 200 to 300 million this year, but they recently just, they licensed the launch of a new product. It's a filler, like a lip filler, so Botox is, to get rid of wrinkles, and then there's fillers. So this gives them a new product. They raised their 27 or 28 guidance from 500 million to 700 million, but the analysts haven't changed their numbers yet.
What's the ticker symbol?
EOLS.
EOLS.
So I think market cap's around $1.5 billion, if I remember correctly. The company just got through some legal stuff. Like the founder of the company had violated some patents, so they had to pay off some people and pay out some stock and agree to a royalty structure. But the stock is cheap. I mean, they're expected to grow revenues by 25 to 30% for the next 4 or 5 years. The company said they're going to compound revenues at 29% through 2028 with this new product added. So it's interesting. Like
sounds very interesting.
Doesn't get a lot of coverage. I think there's only a few analysts that cover it, and all the analysts that cover it all have buy ratings and all recently raised their price target, even though the stock is falling. So stocks like $8 and their average price target's around 19 right now. So it's interesting. I mean, and they could easily get acquired. Like I have a position in InMode. I don't know if you're familiar with InMode or not. It's a med tech company. They make these they're called RF products. Kim Kardashian, like all these celebrities use these products because it's a way to get a facelift without any, no surgery. I would love for them to buy EOLS because they all sell to the same sorts of like med spas, medical estheticians. So nice crossover.
Cool. Well, I will look into this EOLS. It looks interesting. Yeah. Nice.
What other stocks are on your radar right now that you don't?
Right now, we've been actively trading. We've had a good day today, thank God, because last week was not good for us. Today we're crushing the market because we happen to be in 2 stocks which are really hot, which is Space SPCE Virgin Galactic, and then SOUN, which is an AI SOUN company. So like,
I'm in that one too.
Yeah, that was
my trading portfolio.
Yeah, us too. Only in our trading portfolio.
So I run 2 portfolios like you guys. I have my long-term investment portfolio and then my trading portfolio.
Yeah.
Because it is good. Like I feel like you do need to separate the two. Like I feel if you try to do them in the same account with the same mindset, it doesn't work. Yeah, absolutely. Yeah, we separate the two. And then, we've had a great day with SOUN, SPCE. SOUN was actually our trade of the week idea. I'm on a show every Monday night. Well, tonight it's going to be Tuesday night because of the holiday yesterday, but it's with Wolf Financial. Yep.
They do show everyone. So on there, it looks like we're going to win the competition because I chose an SOUN for the week. So that's going to be great. And then like today, for example, we're playing PayPal. So PayPal had a couple catalysts this morning. They increased their buyback from 4 billion to 5 billion. They're selling off a loan book, like I think it's 40 billion or something in loans to KKR or something like that.
That's like their buy now, pay later book, right?
That's right. Yeah. So they had some good catalysts this morning and it broke the 50-day moving average. So actually this morning we had done that. We said, all right, based on these catalysts and there was a low RSI, we got in a small position this morning predicting that it would break the 50-day moving average. And when it did, and it did break the 50-day, we actually doubled down. So we're still in that from this morning. And right now you can see that break of the 50 DMA, and the next target we have is $69.68 at the bottom of the gap that was created on May 9th. So that's another example of something we're in. So these are like SPCE, SONE, PayPal. these are like stocks we're in for like 1 to 3 day period based on the news and the catalysts and technicals, things like that.
Cool.
Yeah.
Anything else you want to cover?
Anything else I want to cover?
What are your overall thoughts on the market? I mean, we've had a good run this year.
That's a good question. You know, I've been like bearish for like almost 2 years overall on macro. And I probably made the mistake during that time of thinking, even though I hate the macro and I hate, interest rates going up and it's not a good environment for growth stocks, I was like, I can still find the 1% of growth stocks that will buck the trend because they're inflecting their profitability. So I had like focused on that in the past year and a half. In retrospect, I probably should have, but what is it going to do? Take a vacation? Like I do this full time.
Sit in cash, do nothing.
I mean, if I had another job full time, I would have like left the market for 2 years. But anyway, I turned bullish for the first time.
I guess that's when you're supposed to short.
Yeah, I guess that's when you're supposed to short. But I got bullish really for the first time in like intermediate to the long term after this presser we had last week with Jerome Powell, combined with the technicals we're seeing in the overall market. I think we're probably due for a sharp correction at some point, but longer term, like intermediate to longer term, I now actually think there's a possibility we can have that soft landing. Yep. I mean, this recession has been delayed for so long, and now we're seeing this AI boom. I don't know. I'm starting to think that the worst of it is over. So right now I'm bullish, but honestly, it doesn't even make that
comes
much
down, right? I mean, we're gonna have a headline CPI number in 4 weeks that is under 3.5%.
Yeah.
I mean, I don't know if the Fed can really hike rates again with headline CPI under 3.5%, maybe even closer to 3%.
Mm-hmm.
I mean, that's going to be tough for the Fed to keep hiking, although they don't have an August meeting. So they might be thinking like, okay, there's no, if we go now, then we're done. Like this is it. So you think if they hike again and say we're done, or they don't hike again, is that bullish for stocks?
I'm just honestly, I'm looking at technicals of QQQ SPY, and I think when I heard Powell speak, I got the feeling he was done. And it's his peers that were kind of forcing him to put these things that, we could raise again, but and I could be totally wrong about this, just kind of reading in between the lines and reading his body language. I felt like he thinks that could be it. He paused and we're kind of out of it. That's my feeling about that. But, honestly, for me, it really doesn't make a difference. Maybe it should make a difference, but, I'm trying to stock pick and I'm looking for companies at inflection points that have catalysts for the day, the week, the month, the quarter. And even in the worst economic environment, you can find companies that are growing, and you can have the macroeconomy, shrinking, but you can have a company taking market share from some other company. So it doesn't really change my strategy that much, to be honest with you.
Yeah, I mean, look at Celsius, right? I mean, energy drink category is only growing 8-9% year over year. They're growing triple digits because they're taking,
there you go. And Aehr too, right? Celsius and Aehr, right through this whole big bear market we had the last 2 years, they're hitting all-time highs.
What does Aehr do exactly? Is it silicon carbide?
So silicon carbide is a material that's needed in order to make semiconductors work in EV vehicles.
Okay.
So what Aehr does is that they basically break them in, after they're manufactured, they stress test them, right? They stress test them to make sure that they won't fail. There's a percentage of these semiconductors that they'll have to throw away after they're manufactured. So if, let's say Tesla, which is their biggest customer, if they don't stress test these chips, then what can end up happening is your Tesla will just like stop driving in the middle of the road. So, what Aehr does, they have a patent for a machine that is able to basically test many of these wafers, these silicon carbide wafers. They're able to test them all in one shot. So it's much more cost efficient to use their process versus the traditional method that the manufacturers were using. And they have a patent for that. So if you want to use a more cost-effective method to be able to test them, you have to use Aehr.
Does anyone else do what Aehr does?
If you talk to the CEO, he'll tell you they have a strong patent portfolio and no one else can do what they do without violating the patent portfolio.
So as long as there's EV adoption, Aehr should do well? Is that
as long as you're using silicon carbide, which if you talk to the CEO, he thinks that there'll be at least another decade where they're using silicon carbide. They could move to other materials in the future. but also their systems can be used for other materials in the future, like possibly gallium nitride. So I'm not an expert in all these materials and which one's going to come next and when they're going to come. All I know is silicon carbide is needed for EVs for the foreseeable future, and that's why Aehr is doing well.
How did Aehr first get on your radar?
So Aehr was on my radar. Just a friend told me about it like 5 years ago or so, and I was following.
That's a good friend.
Yeah, and I had it on my radar. And what's really interesting is if you pull up the chart of Aehr, you'll see they had a big. Let me see here. They had a big pop in the past when they were selling some equipment to Apple. Here, let me see if I can find it here. Okay, it was back in 2017. So the stock went from like $1 to $6, split $1 to $6 back in 2017. It came right back down after about a year, went back to $1. So, part of how I analyze stocks is, again, because I think the market is efficient, there's a reason why it went to one. There's a logical discoverable reason why Aehr went from 1 to 6 and back down from 6 to 1. So that was a focal point of my research, was to find out why that happened. And what I discovered was they had been selling some of these devices to Apple for one of their, I don't know if it was for the iPhone. I think it was for the iPhone. And what I learned from there is that while they were selling this to Apple, Apple was using it just for validation that their manufacturing process was working, which meant that they were able to do spot tests basically, or just use it once and say, hey, our manufacturing's fine, so we don't need to keep testing each and every chip, right? There's not a percentage of chips that will fail like there are for the silicon carbide chips for EV, right? No matter how good the manufacturing process is, they got to go through the complete manufacturing process and then throw a bunch of them away. At Apple, what they found out was they were just using Aehr's machine for validation of the manufacturing process. Whereas for Tesla and EVs, and this is how I knew the difference. So then the press release came out many years later in 2021. So fast forward 5 years later. And I understood that the opportunity was for Aehr to find business where the manufacturer needed to test each and every single one for failure, not simply validate their manufacturing process. So that was the key, differentiating between those 2 points. And when I read the press release on that, that day, it was clear that this particular customer that was buying it for EVs, they weren't buying it to validate their process. They were buying it to burn in and stress test each and every single one, right? And I forgot the terminology that was used for that, but if you go back and look at that, I was able to suss that out, right? Tease that out.
Did Aehr disclose that Tesla was the customer? Not
directly, and they've still never been disclosed as the customer. I think it's through onsemi. I think it's onsemi, which supplies Tesla.
Yeah, I think that's correct.
Yeah, I think that's the relationship. So they disclose onsemi, but not Tesla. But everyone kind of knew. And we've interviewed management before, and they've dropped hints and stuff that it's Tesla without saying it. So but that was the key, to understand that, hey, this is something they're going to sell to onsemi not just once to verify that EVs are working and they'd never need it again, but on every single production run, they got to test it, stress test it, and take out the weak ones. So that was the turning point for me. That's when I doubled my position.
What's the best idea you've had someone pitch on StoryTrading?
Best idea when? In what, just recently or ever?
Well, how long have you been doing it for? A couple of years?
Yeah, about 3 or 4. I mean, listen, Aehr was one of those ones. It was on my radar, but I did, interview several people about it. There's more than one person in our community. There was 2 or 3 people who were very familiar with what Aehr did. So like we had so many like Zoom events about Aehr even before that news hit, that like we just had a really good understanding of what news to look for before we doubled down. So I mean, that was definitely the most successful example of what we've done.
Cool.
Yeah.
Ben, where's a good place for people to find you? I know you spend a lot of time on Twitter, right?
I'm on Twitter. Actually, I don't know if you can find my handle on Twitter. I think I'm shadow banned there or something. So StoryTrading. We're on StoryTrading on Twitter. We also have StoryTrading.com. We have a YouTube channel, youtube.com/StoryTrading. We have an app you can download.
Is it all free? I mean, I know StoryTrading, there is a membership to it, right?
There is. It's I think we have a 7-day free trial, and then it's $30 a month. We do have an app as well, which is free to download. It's storytrading.com/app. One day, I'd like to kind of have really good features in there that can kind of compete with stock twits or something like that. So you'll see the formation of that in our app. You'll see we have watch lists, we have real-time price quotes and stuff. So we're working on making that better. But the main thing the app gives you is access to all of our exclusive shows. So like every morning, again, at 9 a.m., every day at 4 p.m., I do another show. We'll interview CEOs. On average, maybe twice a month, we'll do a CEO interview. So all of that you get access to through our app.
And then what goes on YouTube?
YouTube, we'll put clips. We'll put clips of the, let's say there's a full interview. We'll put 90 seconds of it up on YouTube as a teaser.
Do you run StoryTrading by yourself, or do you have a partner?
I have people as well.
Okay.
Yeah.
I was gonna say that's a lot of work.
Yeah.
Well, Ben, thank you so much, man. Really appreciate it. Congrats with the hedge fund. Hope you guys crush it with performance.
Thank you, Jonah.
Let's do this again in 6 months.
Sounds great.
Okay. I'll talk to you soon.
Thanks so much.
Have a
Take
good
care.
one.
Bye-bye.